So hi, Joe Bergeron and Bryan Kent from the Association of Vermont Credit Unions here, and we were just talking about the uniqueness of credit unions this morning. And Bryan, one of the things that occurs to me is, we're always talking about how credit unions are different than other kinds of financial institutions and everything. And there's the whole cooperative structure and the profits going back to members and so on and so forth. But there's a very practical way that members can see and feel, and legislators and media people understand in terms of service delivery that we were talking about this morning with shared branching. And so I was hoping that you could talk a little bit about that and what is shared branching.
Sure. Well, thanks, Joe, and we appreciate your time. Shared branching is basically, at its simple level, I think it's one of the best examples of credit unions working together, really to try to do two things. One, bringing member convenience and peace of mind to the next level. It's more or less credit unions sitting down and saying, we're going to use our branches systems together. So if I'm a member of one credit union, I can go to another credit union's branch, and that either may be in Vermont or any other state in the United States, and do a basic teller transactions. Huge advantages for that, because if you're sitting down with a member, you don't have to say I'm a credit union and we're limited to 3, 5, 8 branches. You can now say we have thousands of branches all throughout the United States that are available for you. I think the other part too is peace of mind, and that can go two ways. Is peace of mind for the member, saying that, if I live in St. Albans and ordinarily my credit union is in Williston, if it's a Saturday or Sunday and I'm not driving into work, I can go to the branch down the street to do that type of transaction. And that same formula works out if you have a UVM student or a Champlain student that comes here during the school year and goes back home. They don't have to go that old school approach of saying I either have to close out my account or getting very creative in terms of how I can keep that account open for the period of time that they need it.
Sure, that's great.
We thought would be a good idea as we talk about the basics of how shared branching works. We're going to let you watch a short video that puts some of those things together, and then we join the conversation after that.
Okay, let's watch.
Have you ever needed to make a deposit or loan payment, but you were nowhere close to your credit union? With shared branching, that's no longer a problem. Your credit union belongs to the Shared Branch Network, and you now have access to more than 5,000 branch locations in the U.S. to perform those important transactions. A shared branch is a credit union location that shares its facilities with members like you to make deposits, withdrawals, loan payments, or to transfer funds between accounts, cash checks, make a balance inquiry, print statements, purchase money orders, official checks, and much more, all in person. You're not tied to just one location. It's like having a branch nearby anytime you need one. Just bring in the name of your credit union, your account number as it appears on your statement, and a valid government-issued ID to make your transaction. Finding a branch is easy with locator tools like the automated phone system, mobile app, and website. Stop worrying about switching accounts if you move, go out of state for school, or travel often. Just look for the Co-op Shared Branch logo.
Good video, Bryan.
Thank you.
That was a good idea to run that for everyone. I think it's pretty succinct and pretty clear and gets the message across, the basics about shared branching. So we hope everybody found that video helpful and beneficial. But let's talk about the applicability of shared branching to the typical credit union. So we've got a handful of credit unions in Vermont that utilize shared branching. But how do you think that it really benefits the credit union and its members directly, beyond the obvious?
I'd say two ways. First is for the member by themselves. You're giving them just an incredible amount of flexibility, either for their personal lives or if they travel. They can use branches all over the U.S. anytime that they want. I think the second one is more internal, that credit unions don't necessarily think about coming out of the gate. And that's probably with disaster recovery. Reminded me several years ago when I worked in the branch environment. I opened up the branch one day, a pipe had burst that night, and it was down. And it was going to be down for a period of time. Had the credit union had shared branching, it would have been easy to put out a notice to people to say, okay, this branch is closed, but as opposed to maybe having to drive 10, 15, 20 minutes or 10, 15 miles to the next branch, there would have been another one right around the corner. So I think that's just a lot of member convenience, and we look at things have happened, on a national scale with like Katrina, or what's happened here in Vermont with Irene, I think it's a good part of your strategy session to say, just in case something like this happens, we have a backup plan that doesn't need to be implemented or rolled out. It's there for our members 24/7 when they need to use it.
That disaster recovery angle is a great point that I don't think we think of too often when we're talking to credit unions about shared branching. You're right, that's very beneficial in a disaster. Probably not worth getting into shared branching just for that, but it's a great add-on benefit from a recovery perspective and letting your members go to other locations. And speaking of locations, so I don't remember if you said this earlier, how many locations around the country?
And it's continually growing. There's actually over 7,000 locations combined, and that comes in two groups. The one is the traditional one where most credit unions that join open up their branches. And as of today, there's over 5,000 of those branches in all 50 states in the U.S. In addition, and it's just a hair under 2,000 as of right now, a lot of credit unions have been going out and buying self-service kiosks. So again, it's another method that members can come in. The only difference is they're not going face-to-face with the teller, but you can go up to a kiosk, which is very high-tech and high-touch, and do all your regular type of transactions, whether it's deposit, withdrawal, balance inquiry, so on and so forth.
So you're telling your members, okay, you can go do your transactions at this branch of some other credit union as if you were in my credit union. And that's what we do with our younger son. He's in Denver, so other side of the country, and he does business with the local Vermont credit union he's a member of, but through a branch of a credit union out in Denver. So we know it works very well. But how is that possible? But what's the connectivity that has to happen, that the credit union has to have in place to make that happen?
It's a great question, and I think for decades we've always been used to like an ATM network that we know just works by having something where core platform systems could talk to each other.
Right.
And basically that's exactly the same way in shared branching. So when you visit a shared branching site, they'll open up a special platform that allows that credit union's core system to talk to the home credit union core system. And they can identify the information. They'll ask for your name, the source of ID, so on and so forth, to make sure it's secure. But they can do all those basic type of ones. But it's really just a matter of everyone who joins the network agrees to add on to this joint sharing type platform that makes it work nationwide.
So a teller, a member representative, whatever the title is, in that other credit union that's acquiring that transaction has the ability to look up my member's account information.
Yes,
remotely.
And all they have the ability to do is view it. For security purposes, once that transaction is done, that information is no longer available to the other guest branch. And I'm not aware of any issues that's ever come up with that, but that's just built in as an additional security feature.
So I would imagine another question that comes up when you're talking to credit unions about shared branching and how that works, what you just said, is somebody that hasn't dealt with it before, asking the question, well, what's to prevent the employee of that other credit union that's doing the transaction for my member from cross-selling, their rates and fees and services and so on?
It's a great question, and that's very often one of the first questions that comes up anytime we think about doing something out of the box. Two reasons for that. One is there actually is a very formal network in place to make sure that doesn't happen. It's set up, it's in the guidelines, there can be penalties, and you can be eliminated from the program if your credit union does that. So it's important before you roll out that you make that clear that that is not going to happen, both for members coming to you or vice versa, your members going to somewhere else. They even enforce that with a network of secret shoppers that'll come in, give feedback, but want to give assurance to everybody in the network based on its integrity that that is not going to happen. And if it does, there's very strict steps. Ironically, though, as we've kind of found out and talked to people over the years, your members, usually what they want to do when they go to another shared branching site is they're looking for convenience. I want to be able to do a transaction here because I'm here today. I'm not hopefully interested in terms of a situation of what's going to happen with the loan, so on and so forth. My purpose of coming in here today, it was convenient. I want to do a basic transaction, maybe get a question answered, and then be out and on my way. So although ironically it always comes up as a concern, I think we've seen over practice, members are much more focused on the convenience of getting in and out of what they want to do quickly, as opposed to extending it into another, longer extended type process.
What about, and I've heard you talk about this from time to time, when there must be instances, rare hopefully, when there's a conflict or an issue to resolve between credit unions because somebody made a deposit, for example, but the check was forged or something. The other credit union took it, and so maybe that's not a good example. But there are issues to resolve. There've got to be from time to time, just like there are with ATM transactions.
There are. Fortunately, it's very rare. Here in Vermont, we've had 3 credit unions on the program now, and we're probably going up about a 9-year anniversary. I can probably think of 5 or less of those scenarios that occur, but they can happen. And again, there's a formalized dispute structure. Some are easily resolved. It could be a case of a teller punching in a wrong digit number or something like that back and forth. A couple can get more elaborate, and that's something that we provide as a benefit to the association. If it goes to a higher level, we're there to assist our Vermont credit union to make sure it gets resolved quickly and to their satisfaction.
I also, I think I've heard you talk about before, excuse me, that there's not really any hard and fast size limit of credit unions that this works for or doesn't work for. I think it doesn't matter. It's not really an issue of credit unions below a certain size. This can't work for, but you have to meet the technology standards and the startup investment and so on and so forth.
Yes, and that's a great example. And I think you're right. I mean, you can be a small credit union who I think coming out of the gate could see the benefit of saying, we have 5,000 plus branches throughout the United States, and that's not even counting the kiosk type machines. But even for a larger credit union, anytime you can add more branches and more facilities to your members but not have to pay for that brick and mortar, to me, that's just working smart, using the dollars and stuff that you have to try to compete and stay relevant to your members in terms of that type of scenario. Systems, you're exactly right, though. In order to get that platform talking to each other, you do need to reach out to your core system provider first. They'll usually give you a quote in terms of what that costs, and then once you go forward, we can usually have a credit union up and running within 6 to 8 weeks, depending upon their availability and timeline. Yeah, it actually works surprisingly smoothly.
Great. So I know there's a lot more detail about shared branching on the technology side of things and everything, but is there anything else that we've missed as far as the basics for somebody to understand, essentials of how shared branching works and how their credit can get involved?
I think the first few things are just keeping it in mind. It is incredibly convenient for your members. For the credit unions that have joined, we literally have gotten feedback of saying probably the only mistake they made in terms of rolling it out is they'd wish they'd done it years ago. They've got great feedback from their members. Disaster recovery is just a nice thing to have as a cushion in case something happens. So I think the first thing is have a discussion with your credit union and your board of saying, this is something we'd like to pursue. The next step, I think, is just kind of learning the ins and outs, talking to us, finding out the dollars and the timelines, so on and so forth. And then understanding that it rolls out slowly, but it catches on quickly. As we've said before, we do over 6,000 shared branching transactions in Vermont, which is a relatively small state today, as of just 3 credit unions.
Just with 3 credit unions?
Just with 3 credit unions. Wow. And I would quickly anticipate that would grow. I get surprised every single time I look at the reports. These are not just 3 credit unions doing transactions among each other's branches. We see all the time people from Colorado, Arizona, Florida, so on and so forth, coming into Vermont branches, and then vice versa. But very consistently, members are coming back to their credit unions and saying, this is a great, convenient service of what you can provide me, and it adds value, and that's why I plan to be a lifelong member with you for these type of programs.
Anything we haven't covered?
I think that's basically it. We want to thank you for your time today. We encourage you to think about shared branching. If you'd like some more details about how it works, or pricing, or anything else that comes in, feel free to give me a call here at the association, and we'd be happy to have a more detailed discussion with you.
So we'll have your phone number and email address or whatever other contact information on the screen that people are seeing right now. And they can just contact you for more information, how the pricing works, and maybe guidance on whether it's right for their credit union or not.
Absolutely.
Good information, Bryan. Thanks very much. Shared branching brings a lot of benefits to members of those credit unions that are participating, and it's just one more of those very unique things that credit unions use to single themselves out from the competition. So, thanks for all the information today, Bryan.
Great. Thank you for your time. We appreciate it.